the best of money matters.
Market View on Money FM 89.3.
That's right, you're tuning in to Money FM 89.3. Time now for Market View with me, Chua Tian Tian, where we take you through how the Singapore stock market closed for the day, the biggest movers, sectors, and of course the companies to watch. But as always, a quick recap of some key movements. Well, Singapore shares slipped today to track declines seen in Asia. So if we look at the Straits Times Index, it was down 1.2% at 4,373 points at about 2:20 p.m. Singapore time. And that's with a value turnover of 1.18 billion Sing dollars seen in the broader market. Now let's take you through the closing numbers. The STI ended in the red as we shared with you earlier, down 0.84% at 4,389 points. In terms of value turnover, that's 1.7 billion Sing dollars. Gainers trailed losers 209 versus 440. Top advances for today we've got for you InnoTek, UOL and Soy Built Construction. And top decliners we have here GMXUSD, F-Point and DBS. Well, in terms of counters to watch, we do have UOL and Singapore Land Group, and we'll tell you why in just a bit. But elsewhere, from how shares of mainboard-listed InnoTek rallied on the back of order wins for Nvidia and Shenzhen-listed IEIT systems, to how US-China trade frictions sent Asian currencies to a 5-month low, we've got more international headlines in focus. So let's start with the counters to watch, and more specifically UOL and Singapore Land Group. Well, the 666-unit condominium Skye at Holland proved to be the strongest project launch in 2025, selling 98.8% of units over the weekend. So the project Skye at Holland is jointly developed by UOL, Singapore Land Group, Capital and Development, and King Leong. So real estate agents said the high take-up rate signals a broader recovery in the central core region and really bodes well for other upcoming residential launches. So if you look at shares of UOL closing up 2.387%, and shares of Singapore Land Group closed flat for today. Well, from UOL and Singapore Land Group, let's now set our sights on a company that we don't usually talk about. And this company is called InnoTek, which is a supplier of high-precision disk drive components. Well, shares of mainboard-listed InnoTek rallied this morning, and that is after news of the company clinching projects for Nvidia and Shenzhen-listed IEIT systems, spelled as IEIT systems. So the stock soared to a 3-year high and hit 68 Singapore cents as at 10:39 a.m., 23.6% above its Friday closing price of 55 Singapore cents, and that is with some 8.4 million shares changing hands. And it last traded higher in March 2022. So what is going on here is that InnoTek announced today that 2 of its subsidiaries had clinched projects to produce components for Nvidia and IEIT systems. Its subsidiary, Magix Mechatronics Dongguan Company, has secured initial precision machining orders for components used in Nvidia's products, with production expected to commence in Q4 of FY 2025. Now, at the same time, its other subsidiary, Sun Mansfield Manufacturing Dongguan Company, won a new project to produce metal casings and components for graphic processing unit servers for IEIT systems, with manufacturing set to start in October. Now, who is IEIT Systems exactly? Well, IEIT Systems is a provider of data center and cloud computing infrastructure listed on the Shenzhen Stock Exchange. It is part of the Chinese state-owned Inspur Group, which is the country's largest server manufacturer and also one of the top global suppliers by market share. And while investors are positive on InnoTek, as we shared with you earlier, Singapore equities mostly red across the board, and in fact selling hit Asia-Pacific markets today following the latest salvo and the trade war between the US and China. Now, just to bring you some numbers and some movements earlier in the day, as at 11:40 a.m., Hong Kong's Hang Seng Index slumped 3.1% after opening at a 2.4% drop. And if we look at mainland China, the Shanghai Stock Exchange Composite Index fell 3.3% as at 9:45 a.m. before paring some losses to be 1.6% lower. Now, if we look at the CSI 300, similarly tumbled 4.5% initially and recovered slightly to be 1.2% down at 11:40 a.m. In South Korea, the Kospi down as much as 1.5% as at 9:35 a.m. before paring some losses to be 1.3% lower at 12:40 p.m. Australia's ASX fell 0.8% as at 2:40 p.m. Sydney time, while markets in Japan closed for today for a holiday. Now, just to bring you the closing numbers, we do see markets closing in a sea of red as well. Australia's ASX 200 closed down 0.84%. South Korea's Kospi closed down 0.72%. Hong Kong's Hang Seng closed down 1.76%. And Shanghai Composite closed down 0.19%. So what's behind the movements? Well, the movements came after US President Donald Trump said that he would impose a fresh 100% tariff on China on top of existing levies and export controls on any and all critical software starting from the 1st of November. Now, this came after a 10th of October threat of trade action against China in response to what are called hostile export controls Beijing placed on rare earth minerals. But according to Chinese state news agency Xinhua, Beijing said yesterday that it will retaliate if Trump does not back down. So Trump's planned tariffs will see import taxes on Chinese goods rise to 130% from 30%, slightly under the 145% level imposed earlier this year that was later reduced. Now, that being said, not all is doom and gloom because later Trump posted a statement on his Truth Social platform that hinted that Chinese President Xi Jinping might have a way to back down and suggested that a full trade war would hurt China. So all in, analysts broadly expected this latest shock to dissipate in the medium and long term, with the latest war of words, likely just for show. And on the currency front as well, Asian currencies slipped to the weakest level since May as, of course, renewed trade tensions between the US and China, we talked about earlier, induced caution among traders. So the Bloomberg Asia Dollar Spot Index fell as much as 0.2% to 91.51 today, the lowest level since the 9th of May. And if we look at export-sensitive Taiwanese dollar and the South Korean won, they dropped the most among emerging Asian currencies. But beyond the trade dispute, regional currencies are also being weighed down as surprise cuts in Indonesia and also the Philippines spurred bets for similar moves in other Asian nations. And in the meantime, the U.S. Federal Reserve officials, they're indicating caution on further rate reductions, which is boosting the U.S. dollar and adding to that downward pressure on regional peers. Well, and finally, staying on the currency front, this one is for you if you're traveling to Malaysia this holiday period. Well, the Malaysian ringgit set to extend its recent gains as strong domestic spending and the government's fiscal prudence cushioned the blow from U.S. tariffs. Now, that is according to the country's second finance minister, Amir Hamzah Azizan. Well, to this end, Amir said the currency may strengthen to just below 4 ringgit versus the U.S. dollar in 12 months, and that would represent a more than 5% gain. That takes the currency to its strongest closing level since 2018. Now, if we look at the Malaysian ringgit, it has appreciated nearly 6% this year, making it the best performer in Southeast Asia. And the second finance minister said policies including wage hikes for civil servants and a high employment rate are boosting domestic consumption and supporting growth. Now, he added that the government is putting money in the hands of the people and small and medium enterprises. All in, the Malaysian government expects the economy to expand 4 to 4.5% next year from a projected expansion of 4 to 4.8% in 2025. What do you think of movements in the Malaysian ringgit and broadly speaking, what do you think of today's headlines? Well, let us know anytime at 8855-0893. You have the magic number 8855-0893. And that's all that I have for you on Market View. I'm Chua Tian Tian.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.